Okay. Ideally, you'll want to be able to identify the trend first because you want to trade with the trend. The tenet that everyone says the trend is your friend. The reason you want to be trading with the trend is because that will give your trade more room to like run in profit. Counter trend trades can work, but you will also be limited in your profit because overall the sentiment is like up. So you don't want to be shorting all the time if that's, the main trend. The way that I use to identify trend typically involves a combination of moving averages and Williams accumulation and distribution, but that's like super complicated and gets kind of technical. But one that is really, really close to that is the EMA, the 50 period EMA. If you plop that on your chart, that's like it's really close. Crap, 50, same as not same as chart on the day. There we go. All right. The 50-day EMA is like really good. It aligns very closely with my standard method for determining trend. The the moving averages and the Williams accumulation distribution isn't a stock indicator for trading views, so there's no way to add it unless you like create the script yourself. And I have one, but that particular methodology is actually copywritten by a pro trader, so you can't distribute it out without like paying some sort of licensing fee or something like that. But I knew what he was doing, like I read about it and I knew what he was doing, so I just coded it myself. It's just I can't publish it on TradingView because it's, licensed and restricted. But the 50-day EMA, as you can see here, it's really close to it's really well, you can't see, but it's close to how I determine trend. So if price is trading above the 50-day EMA, then you're in a bullish trend, and you'll want to be looking for long trades at support. If like for trading, you need sorry, for trading you'll want to like your identifying the trend is like the first part. You also need to have like a directional bias. So if you're wanting to trade smaller time frames, you'll look at the daily chart and you'll see what the trend is. See we're here trading above the 50-day EMA, so we're in a bullish trend. So then you'll move down to whatever time frame it is that you want to trade on. And when I say you want to look at the time frame that you're trading on, you want to analyze the charts looking at one particular time frame and just make a trade on that time frame, because things can look different on different time frames. Like the 1 hour time frame, you can be in like a steady uptrend, but on the daily time frame you can be like going down, because that's just how it works. Like there are 24 1 hour candles on the 1 hour chart. So all this price action that you have like in here is all just right there. So that's like not really like that doesn't mean so much relatively. So if you're analyzing an intraday time frame to make a trade, you don't want to find your targets based off of this chart because like so much is happening in like that one bar when you're looking like here. Does that sort of make sense? Like you want to analyze the chart that you're making the time, or you want to analyze your trade based on the time frame that you want to trade on. Like if you're looking to have like a really really short time frame, like your trade is going to be open for only a little bit of a time, then you'll want to be looking at the 1 hour chart or the 15-minute chart, and like that's all you look at for like entering and exiting. Because if you're exiting on a different time frame, then the signals that you're looking at won't be relevant to like what's happening now. That's one of the things that like I've watched some of CJ's videos, and like some of it, like if you're looking at the 5 minute chart, and you make a trade based off the 5 minute chart, and you're in that trade for 3 days, like the signals that you were looking at to enter have like occurred probably 13, 14 times since you first looked at the chart. Like you could have had tons of entries and exits at profit in on the 5 minute chart, because it's just the 5 minutes. How many 5 minute periods are there in 3 days? There are a lot. So like to pick an exit based off of a higher time frame, like what's that? Who's that? I'm sorry. Was there? Never mind. Okay. Crap. Where'd it go? Is it for trading views? Is it workable to use the phone version? Yeah, it is. But man, I hope you have a big phone screen, because it'll be really tough to look at everything on a tiny phone. Like I do have an iPad that like I'll use in a pinch if I just need to look at something when I'm not at home, but I wouldn't advise doing all your analysis on a phone. That's really challenging. Anyways, let me move that down. Sorry, really off track. Okay, so first part, swing trading, trend identification, and directional bias. So we've established here that we're over the 50-period EMA, so we're in a bullish trend. Then we want to identify our support and resistance, because you want to enter in at support and sell at resistance. So if you watched my video about support and resistance, what I'll do is I'll start on the higher time frame and work my way down to where I want to actually make a trade. Like if I'm looking at the daily time frame, it could be a week or two before I get an entry signal. That's just, because each bar is 1 day. So like how long do I want to wait before I make a trade? And that determines, what time frame you're looking at. But anyways, when I make my support and resistance, I start from the top down at like the higher time frame of the daily chart, and then I'll pick like my last lowest low and the last highest high, and that will create the range that I want to make a trade in. So if I'm trading off, if I'm trading off the daily chart, like my lowest lows, my last lowest low is down here, my last highest high is right up there. So this will be my range for making trades on the daily chart. So I don't want to be buying anything until we're like in this zone down here, because this is where the area of value is, and I'll be looking to sell somewhere. Dang it, this is horrible. I should turn off the magnet. And I'll be looking to sell somewhere up in this zone right here, because that's where price is being rejected at, and this is where price is being supported. So on the daily chart, if I'm just making trades off the daily chart, I don't want to do anything inside this zone here, because there's no guarantee like which direction price will be going. Like all I know is this is resistance and this is support. So all this stuff in here, I don't want to be doing anything, because if I made a trade right here, then I'm limited in my upside before I know I get resistance. Where if I'm down here, like say price starts turning down, like if I enter a trade right here, if price turns down, I don't have any reliable support until right there. So like I'd have to take heat on my trade all the way down to here before I know that I'm getting support. And then also like I'm limited in my upside potential, because this is going to be some area of resistance. So what is it? I don't know. Like I'll be getting 7% to the upside potential profit, and like I have at least 15%, to the downside before I have support. And like that's not ideal. You want to have at least a 1-for-1 like risk to reward ratio. But ideally 2-to-1 is what you would want. But 1-to-1 I can deal with. 2-to-1 is preferable. So just looking at the chart here, like on the daily chart, I'm not making any trades until price comes down to here. And this is why it's also important to like look at multiple assets, because if I want to stick to safe trades, then for Bitcoin I'd have to wait, and I don't want to wait. So I either have a bunch of different assets where I've got these support zones drawn in with like an alert. So I'll put an alert on this zone right there, just so it gives me a notification whenever price comes down here, and I can look back at the chart and see if price is being supported or if it's falling out the bottom. If it's falling out the bottom, I don't want to do anything either. But like I'll set an alert on like a bunch of different assets at that bottom support zone. So whenever price gets down here, I'll just pop in, look at the chart, and see if I want to make a trade. But if I don't want to wait, then this is where you move down in time frames to draw more supports. We'll go down to the 8-hour. I like to do the daily, the 8-hour, the 4-hour, and if I'm like really impatient, I'll do the 1 hour. But mostly it's just the daily, the 8-hour, and the 4. So we have our daily supports or our daily range right there. So we want to draw stuff in between those two. So we'll go to like our last lowest low right there. It's fine. There isn't really a highest high. Like our daily chart was our highest high here, but since that's not really helpful to me, then I'll look for like the next like area of resistance, and I would draw that like right here, because you can see price has come up and it was rejected, and then it broke above here, came back down, supported, and then failed. So I'd look like I was saying, I'd look for my last lowest low on this time frame, the 8-hour time frame. This was my last lowest low, and then I'll look for the next highest resistance would be right there. So if I'm on the 4-hour time frame, or excuse me, if I'm on the 8-hour time frame and I want to do a swing trade, I'll be looking for prices to come down in here to buy, and then I'll be looking for prices in here to sell, because I'm looking to buy at my closest support and looking to sell at my first resistance. So again, I'm just kind of waiting until something happens. If this breaks down from here and fails, then I'd be looking to buy at this next support down there, which was like the daily time frames, support and resistance. So if we're on the 8-hour time frame, each bar is 8 hours. So I'm still waiting who knows how long until price gets back down here. If I'm really impatient and I still want to make a trade, then I'll drop down another time frame and do more supports and resistances. So the last lowest low on the 4-hour time frame is like right around here. My last highest high is like right around there. So I'd drop it down a little bit. Sorry. Go to the close. So this would be my closest resistance. This would be my closest support. And again, I'm not doing anything. I'm just waiting because I want to buy at support and I want to sell at resistance. So this chart kind of sucks. I can't do anything yet because there's no, like, we're in between an area of support and resistance, and we're closest to resistance. So if I enter in now, like I've only got 1% before I get to resistance, and I've got, dang it, ruler. If I bought it right now, I have like 3% loss that I'd have to take before I get support. So like you want to be buying closer to support than resistance. So going back to all the way to the beginning, we have our trend identification, the 50-day EMA. We're above it, so we're bullish. So that means we want to make long trades. And then we want to buy at support, and that would be right here, which is also really cool. Like this looks to be like a really good spot to be making a buy, because we have a horizontal support which is determined by price action, and we have the EMA, which also is like sitting right there at that support line. So this is a confluence of indicators. Like you have a 50-day EMA, which is a dynamic support, lining up with a static support, static meaning unchanged. So this is like a good area of interest that I'd be looking to buy. If price comes back down, I can't see what price it is because there's a window in the way. All right, so yeah, 55, 600, like right around there is like really good. If I was gonna be making a swing trade, that's where I'd be looking to enter, because it probably, like, the odds are higher that it'll be supported because we have two different, things that are determining support than the odds are of it failing. So trend identification, support and resistance, and momentum. Momentum. Let me add momentum. Why can't? Why is momentum? What the heck? Why is the stock indicator not coming up? That's weird. I've never had that happen before. All right. Anyways, momentum will help you determine what price action is doing currently. It's momentum is a leading indicator. Let me go change the length. I like to use a length of 28, depending on what I use a 28 period momentum for divergence, so I just keep it at 28 when I'm doing other trading when I'm doing most of my trading methodologies. I'll just use 28. That gives you like 3 weeks, 4 weeks of almost a month, whatever, a month worth of information. Momentum is the closing price of the current bar minus the closing price of whatever bar in the past that you select. So we're using 28 period momentum, so it's the closing price today minus the closing price 28 days ago, and that determines what momentum is. There is a zero line that some people use for momentum. I don't really care about that so much, but like some people will say a momentum above zero is bullish, momentum below zero is bearish, but that's kind of crude, because you can have bullish momentum when you're below zero. Like if momentum 28 days ago was negative 10,000 and momentum today is zero, that's like an increase in momentum. So even though it's not above zero, you still have, bullish momentum. So I don't really put so much weight into like being above the zero line. Like that doesn't really matter to me. I just want to see the momentum. I want to see it relative to where it was in the past. So like say I'm looking for a swing trade. Let me see if I can go back in time here. All right. So like, let's go back here to this section. If I'm looking for a swing trade, like I want to be looking, so like we have our 50-day EMA and we have support like right here. Like this is where on the pullback, if price is up here, I'd be looking to enter down there. And when price is coming down to this spot, like you can see the momentum here is above where it was before. So even though price is retracing right now, we still have an increase in momentum. So that's, that's a positive sign that price will continue to increase in the future. So that's like part of the agreement. Like you have support, or you have bullish trend, you have price above support, and you have increasing momentum. So that's like 3 parts of the checklist that you can use to enter in your swing trade. And then you'd be looking for an exit point like somewhere up near resistance. If this was me and I was making a trade, like I'd probably start siphoning off profits, siphoning off profits like around there. Oh, dang it, around here, because this is where price is sort of not, like that's where price started to fail. So I'd probably start taking out profit right there, like not all the way, but like you can see that price got back up above this point, and then it failed down. So that would have been a pretty good entry, or part of your process to scale out. Oh yeah, that's another thing. In swing trading, there are two sort of ways to exit that I will use. Exiting either your full position or scaling out. There are two kind of ways that I think about that. If I'm having sort of a period of drawdown where I'm like losing, or if the market's not really letting my trades run for long, then I'll just exit my full position at the first resistance. If the market's been kind of trending well, then I'll scale out. So at this first period of resistance, like if I entered in right down here, how do I draw? I never draw on this stuff. Maybe here, I don't know. Like if I entered in right there and I'm exiting right around here, dang, that's a really bad drawing. I'm horrible at this, guys. If I exited at this period or at this point of resistance right here, if like, oh my God, I'm so bad at this. You can see sort of how in the past, like price is not breaching this resistance zone. Like it's hit here, failed, hit again, failed under the EMA, came back up, failed. I'm not expecting, like, you want to see what the asset has been doing in the recent past. So I wouldn't really be thinking this, like I would be planning for it not to continue much over this, just because there's been a recent history of it not, passing this point. So here I would probably take out my whole position, just because I'm not really concerned with it getting up above that. But if there's been a history of like, oh my God, this is horrible, I'm sorry. Let me see if I can find another example. Okay, so if we were making trades around here, like we've come and broken, if we're continually breaking through resistances, then that's when I'd let a trade run more. Like we'd enter here at support and then I'd let it go through because we had like this really, really good run up, breaking resistance after like, well, it failed here, but it's been trending well on the swings, on the pullbacks. So I'd want to let this one run. But when you're scaling out, you'll exit like half of your position at resistance and then let the rest go. But if it's been not doing well and it's consolidating, then you'll probably want to take out like your whole thing. The whole scaling is helpful to help you get long-term, like longer moves, but you'll have like crappier profits in like a non-trending market. And when you scale, like say I sell half my position, if you're using a stop loss, and you should be using a stop loss, you move your stop loss to the entry point. So that way you don't lose any money and you retain at least some of your profit, if that makes sense. It's really kind of difficult using stop losses in spot markets, because you have to lock up your capital to do that, and that kind of sucks. I mostly trade in the futures market. And I'll also use like third-party extensions. If you're not using 3 commas, you should really consider using 3 commas. It's a really awesome platform that allows you to do trailing stops, trailing buys. You can make conditional entries. So if you want to enter at a certain price, you can like select that in your smart trade terminal, and it won't enter in your limit order until price hits that point. So if you want to make a trade before that, like say I'm trading, like say Bitcoin trades really awesome on the daily time frame, like it's got like 80% profitability, like in reliability and swing trading. Like if I want to only be on the daily time frame, but I don't want to like not make trades on other stuff in the meantime, 3 commas will let you do that because you won't have to keep your capital locked in like a bid on the daily time frame, price. Like if I think I can find an example of this. So like if I wanted to trade on the daily time frame, remember this was our support for the daily time frame, I would have to keep a bid here and just leave it on the exchange for forever, and that would take away capital that I could be using on a smaller time frame on a different asset. So if you're using 3 commas, then you can put in that bid without allocating capital to it, and you can make other trades. But the problem like can happen where if that bid gets hit while you have your capital in something else, then it won't fill the order, obviously. So that can suck, but you should be paying attention to this stuff anyways. But yeah, no. Another thing, going back to the swing trading, sorry. The I said at the very beginning, the methodology that I use to determine trend is the Williams accumulation and moving averages. The 2 moving averages that I use are the 8-period moving average of the lows and the 10-period moving average of the highs. Simple. Oh, dang it. Good Lord. I really don't like this. All right. Moving average, 8 lows. The 8-period of the lows is like really, really reliable for swing entries on trending markets. And the 10-period of the highs is good for swing entries for shorts in like a bearish market. We're gonna hide that one for now, but anyways, here we go. So this one would have been a really nice swing trade to make because you have the 8-period moving average right there. That would be the first place I look to enter. Then you have support underneath that, and you have support underneath that. So I'm not too concerned about making this entry because we have a lot of support, confluence of supports. And then here, let's see if we can find another. Yeah. I mean, you can see here how like throughout the market, like through the trending. Well, this is bearish, so we wouldn't be using that. Sorry. Here we go. So we're back to bullish over here. Support. Failed here, but it went down to the daily support, broke above, and then it's holding, whatever. Yeah, no, I like the 8-period moving average of the low and trending markets. 10-period, if you're shorting, the 10-period of the highs, but I don't. 10-period of highs if you're shorting. Close that one. Here's where we flip bearish right in there. You can see price comes up, gets the 10-period moving average, fails down, comes up, gets near it, fails, comes up, hits it, fails, and then it breaks above finally. Yeah, those are what I'll use in combination with the 50-period EMA on the daily chart. Those are really good supports. But you'll want a dynamic support above a static. So dynamic support above static support, and you have a better dynamic support under there. Like these are all real good places to make swing trades. This would be not great. You wouldn't really want to do this. This is kind of like a ladder, not really a ladder buy situation, but a desperation buy. Like if you jumped in like right here and it failed beneath there, then you could buy at that support and try and save some of it. But Yeah, trend identification with your 50-day EMA, support and resistance, static supports, and dynamic support. And then momentum, increasing momentum when you're on a downtrend. That's when you want to be entering. So this actually will probably pop over this resistance here. We still have, slightly increasing support, and we're above, like it held up. It didn't really, I mean, price came down below, but it hit the support and it's still going. So I'll bet tonight we come over this 5,900 mark. I don't have divergence on here. Yeah, I'll bet we come over 59 tonight. That would be nice. Do we have any? I mean, that's kind of like the basics of it. Do you have any quick questions or anything like that? Everything I said makes sense or not make sense or what? I don't know.
I thought it made sense.
Yeah, I mean, like it's not too crazy. There's just a lot of like the extreme basics. Even if you take out like the moving averages, just understanding momentum, trend, and support and resistance, like you can make trades. Like take away every moving average, and it like I posted a week ago. Where is it? Dang it! I gotta move this. I posted 2 weeks ago. I posted this in the chat room, and it was, oh my lord, I thought I changed this. It was, oh good lord, I added in orange ones later, but it was support and resistance drawn like I do from the daily to the 8 hour to the 4 hour to the 1 hour, and I drew those on the 21st right there. And you can see how you could have made tons and tons and tons of trades. Just so the blue lines were the 8 hour, the red lines were the 4 hour, and we don't have the daily on there. The daily was the yellow ones. Yeah, wait, I don't remember if that's blue or purple, but whatever. The yellow was the daily range. I posted it here. Like I did the analysis on all of this price action back here, and then I posted the video right there. And you can see how you could have made tons and tons of trades throughout this. Like holding up at this support there, you could have made a trade, and that blew up all the way through here. Kept going until we hit resistance, failed a little bit, came to support, went up, broke the resistance, support, resistance, support. You can, like the important thing is like seeing, okay, like when you're doing support and resistance, the biggest thing, like there's something I said before, but like the important relationship of prices is for resistance. You want to be looking at the relationship between the high and the close. The highs and peaks of price action are driven by retail, and the close are driven by whales or institutions, whatever. Like they dictate where prices are, where prices are closing. So like having a wick like this is creating like that's the close right there is the important. Well, sorry, this is a red candle. The close right there is important, but just analyzing where the wick is at is the important part. Like the difference between the wick and the body, because this is an area of importance to look at because price came all the way up there, but institutions or people with money drove the price all the way down to there. So this is important to watch, and this is where you'll be expecting price to hang up in the next time it gets there. Same here. You have price going back down. Like this was our area of support. Price came below it, closed below, but then immediately was pushed back up. So this is like the area of interest. And then when you get to another area of resistance or support, you can see once it's gotten above it, it just freaking blew out through it, hung up at this 4-hour resistance mark. Like this is where you have your sellers coming back in and they're trying to push the price back down, and they did all the way to there, but then bulls came back in and pushed it back up. And then it comes up, breaks that resistance. The 4-hour resistance hits, the next resistance up there. You can just see how price is just playing in between all these zones. Like, and this was 2 weeks ago, and you could make tons and tons of trades in here, buying at support, selling resistance, buying at support, selling resistance, broke the resistance, held here, so you can buy at support, sell at resistance, came back down, not doing anything, hit resistance, buy at support, sell at resistance, buy at support, you take a little bit of heat, sell at resistance, buy at support, fails. If you wanted to buy here, you still could, failed, but it's coming back up. You're at even around here, and we're waiting for another sell at this resistance. I mean, you don't have to go crazy with indicators. Like, you can just have support and resistance on your chart to swing trade. Like, you don't have to do anything crazy. Just understanding the relationship of price action and like areas of value. Zones above support are areas of value, and zones below resistance are areas of value. That's where people are going to be doing shit. Like this consolidation right here is where you have a lot of bit. Like this was our highest high for a while. Like this is where price really, really broke down. Like once it hit here, like look at that drop. Like that's crazy. Like this is when you had like massive liquidations. So this is a zone, like, well, actually all the way in from here. This is a place where they're going, like sellers are very determined to keep price below this range. So when price starts to come back up, when it meets this area, like you have like these periods of consolidation where it's not really bouncing around a lot. It's just like sticking right here for a while. And that's because there's this continued selling pressure trying to keep the price from getting above that. Yeah. You just have to, it's just understanding that price action is people. And when it does something, like that's because people are doing things. And like they don't, like there are people who are making concerted efforts to keep price below this region. And that's why like it's really important to understand support and resistance, to try and understand price action. Because if you can understand the price action, you can see where you can find value in the market. And that's how you can swing trade. Let me see if I can find it real quick. Oh my God, I wish I could type. Bryce put out the trade on comp, 8-hour time frame. I thought it. I wish I could remember where. I don't remember what price he was. He was looking at like 775 or something like that. Yeah, it was like right around. He was on the 8-hour chart. Actually, I don't know what he was looking at. Maybe it was here. Yeah, I think it was around here. He put out he was looking at. Another thing, I'm not really big on patterns. It's not that I don't believe them. I think that people will. Okay, so the biggest issue that I have with like patterns is assigning directionality to them, and I've talked about that in the chat before. Like saying this is a bull flag or a bear flag, it's like really misleading. Like, what is it that makes this a bull flag? Because like it essentially, like it's being said like it's a bull flag because this pattern supposedly leads more often than not to bullish price action, but like that's not true. First off, it's like really variable because like if you're making this pattern, like it's a subjective thing. Like what defines the flag? Like what angle does it have to be at? Or like how closely do closes have to align or whatever. Like if you can make some definable structure and then test that, then I would be like, okay, cool. Like, yeah, this is a bullish pattern, but this is just a pattern. Price is going down and it can go either way out. Like it it can come to the top. It can fall at the bottom or it could go out the top. Like it's 50-50. Like there's no like who knows what it'll do. And like I would call this like a bear flag because like price is trending down. That's bearish. Like it just seems counterintuitive to call it a bull flag, but I can understand why they call it that because they're saying that like typically price breaks to the top side, but that's really uh, you're putting a lot of you're like putting a lot of weight into your analysis. You're putting bias into your analysis that like may not exist. And another thing, like he put the price at like 775, which was like here on the breakout. And I don't like a lot of times he'll call the breakouts of structure. And then when they fail, like he was like, oh, well, you got to plan for the retest or whatever. And it's like, yeah, but like you're talking about a price of 775 when if you literally just followed your own advice and waited for the retest, which would be like down here with when you have like your descending trend line, then you would have had a way better entry at like 750 and be in profit now instead of being just under profit. So like I don't like post for breakout trades or like making breakout trades because like sure they could go up, but they could also just fall back down and fail. So like I'll like, and this goes into swing trading. Like if you're looking at this on like the 1 hour time frame, here you have the breakout and the retest. Like you have a rally and then you have the pullback and you have good lord. You could say you have like support or you have resistance there. Oh my lord, I'm so bad at this. You have resistance there and you have support. Well, this would have been a resistance, like, pullback, rally, pullback. So this would turn into resistance. So this would be the area that you're looking for the retest, like price rallies, and it comes back. You have your entry point right there, comes up, fails at that resistance, comes back down, hits your angular support, and then, you have multiple times to play this trade and still be in profit instead of making that initial entry at 775 on the breakout. So I don't really like breakout trades. I think it's kind of risky. Where swing trading is like it's fine and you'll get the same thing if not better results. Maybe it's a little bit later, but I don't know. It's just less risk. So yeah. And another thing with that though, you're going if you don't take breakout trades, you're going to miss some explosive moves that never come back. But I mean, what does it matter? There are tons and tons and tons of trades. You don't have to get every one of them. So yeah, no, I'm not really one for breakout trades or looking at structure because structure doesn't assign directionality. It's the way price moves outside of structure that assigns directionality. So like it doesn't mean anything that price is setting up in a particular direction. It's just what happens after that really determines if it was bullish or bearish, if that makes sense. Does that make sense? Sorry. Yeah, no. Swing trading is awesome. Trend identification, support resistance, momentum. It's really all you need to be profitable. What else? I don't know. Any questions? I do. So like what I've been thinking with this kind of stuff into the future, is doing more of this, talking about different setups and how I do things or whatever. But it's just kind of like up to you guys. This is all I do every single day. I also do bots and other crap like that. I've got a couple of my strategies automated. And then I have some like bots and 3 commas and Bitsgap and stuff. And there's really there's a lot you can do passively with these types of methodologies. Like if I'm swing trading, and I want to capture volatility, like so let's say I'm looking for a swing trade like on this chart, and I can't be there to monitor it or whatever. I can set like a bot on it, where this will be like my support. Or dang it, I'm really bad at this. Like this would be where I'm looking to enter in, because you have resistance, 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 break out of that resistance, and then I want to be entering in at support. So I'll set like a bot on 3 commas, a grid bot on 3 commas or on Bitsgap, to the base of the structure. Like the base of the grid will be like at the support, and then I'll have the top of the grid up at like this last resistance. And then whenever, like, I'll start the bot once price gets down in this area. Like maybe I'd start it around this. Like maybe I'd start the grid bot like right around there when price comes down to touch here. And then I'll have grids down below that and then grids above it. These would be where I'm essentially getting profit, and these would be where I'm building a position. So if price comes down, like let's say this is comp versus USDT, when price goes into the grids down here, it's buying comp, buying comp, buying comp, buying comp, buying comp, buying comp. And then once it goes up, I have like a bunch of comp, like, stacked up. And then as it moves up, it'll start selling, 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 selling. And it's taking advantage of the volatility in all this movement. Like that's what I did on Doge. Like, for the last 4 days, I've had a Doge bot running, and it's like 25%, and I didn't have to do anything. But yeah, like this swing trading is like so good to like apply all over the place, with lots of different ways to capitalize in the market. I don't know why anybody does anything else. It's just so damn reliable. I don't know. I feel like I'm just kind of chatting my brains out here. Anything? Anybody want me to look at something, or like have any questions about stops or reading charts? Oh, I'll email everybody a book. There are 2 books. One Bryce has talked about before, the technical analysis on multiple time frames, and then there's another one that I'm blanking on the title right now. But it covers a bunch of different methods, and I think that's really important to do, to like look at the wide swath of different trading methodologies, because what I'm doing won't work for everyone. I wish it did, because this shit's so easy, but it doesn't. You have to learn as many different, like not really learn, but you need to be exposed to as many different methods that are out there, and starting with the thing that makes the most sense to you without like getting deep into it should be where you start. Like you don't want to try and force like some trading methodology, because that's just it's gonna make you do things that you either don't understand, or you're gonna be making bad decisions because you like aren't grasping what's happening. Like really like find the first thing that makes the most sense on a basic level to you, and then go deep into that. Try it out for a little while. Like ideally you want to do 100 trades. That's like the thing. 100 trades in a system and if you're profitable, like if you're over 55% profitable, then that's a method that you can like dive deeper into. But you want to look and see what makes the most sense on a basic level to you before having to like study it, and do it that way. Because like if you just keep trying shit over and over and over again that's not really working for you, just because someone else can do it won't help you in your career. I've kind of talked about like CJ's also really big on ladder. I compare a lot of stuff to CJ because like he's really the only other trader that like posts stuff. Like Alan does, he posts a lot of divergence and structural like pattern stuff, but he got divergence from me, and like we talk on the side about it. Same thing, Josh Martin, like he got divergence from me, and like we talk about it. Like CJ does RSI based stuff and the 123 dip, which I actually didn't know. and, and he's also like a big prominent ladder buyer, and I don't really like ladder buying. Number one, I think it's like a little bit limiting. If you all like it's fine because you can like as long as you're making money, who gives a shit? But I think it's sort of limiting in your upside potential because you can get into a habit of not analyzing your trades that initially didn't work out. Because if you ladder buy successfully, then you're in profit. So like, what do you need to look back? You know, what do you need to look at it anymore for? Where what you were initially analyzing could have been a bad setup, but you won't take that second chance to like look at it because you made money. So like, why would you look at it anymore? So like you could have some fundamental flaw in your analysis that you'll never check because you're always in profit. So if you did look at them and critiqued, you know, what you were trading over time, like if you didn't ladder buy and you were always getting stopped out, then you would like why am I always getting stopped out? And you'd look at that trade and figure out that like, oh shit, there was this one thing that was happening on the charts that I just didn't see. And if you don't have that like critique, then like you'll never learn from it. So like you can essentially always be applying that wrong concept into all your trades if you're ladder buying because you won't think to look back at what was wrong. So I don't really like ladder buying. I did it a lot in the beginning because hell yeah, you can save trades, but in the long run, like you'll probably be better and more profitable if you don't do that or you don't make that a habit. Like don't make that your first option of every wrong trade because you could just be wrong in your analysis. I don't know what else. I don't know. Oh, shit. Sorry. Bitcoin. This is something that a lot of people don't do. So the checklist that I had a talk with Brett the other day. He was having a problem with like the process. He's like, I do really good with like having some checklist or something to do. And it's like, okay, well, that's easy. If you're swing trading, then just like find your daily trend, then find your directional bias on the time frame that you want to trade on, then look for support and resistance, and then look at momentum, and then execute your trade. Well, don't execute your trade, sorry. Then look at Bitcoin, because Bitcoin makes up most of the market. Whatever Bitcoin is doing, everything else is probably going to follow. So if you are in a good setup on comp, like right now, if you're in an awesome setup, but Bitcoin looks like it's about to just eat shit, then don't take the trade because comp is probably going to eat shit, even though it looks good. Like more often than not, like that will keep you out of losing trades. So yeah, add that to your process if you're looking at anything besides Bitcoin. Like right before you execute that buy, look at Bitcoin and see what it's doing on the same time frame. Like if you're looking at the 4-hour comp chart, go and look at Bitcoin on the 4-hour chart, see what it looks like. If it looks stable, then you can execute your trade. Like you should add that to your process. But that's really kind of it for swing trading. Everything else just becomes like nuance and like identifying structure and blah blah blah. I'll have a couple videos that I've been working on. I got to redo a bunch of my old stuff because if I make it public, then YouTube hates me because I've got music in it. So I've got to redo a bunch of those old ones and take out the music. But I was going to redo a bunch of this stuff and make it into smaller clips instead of covering like a bunch of stuff in one video. Just have like a bunch of small things about, you know, a 3-minute video about moving averages, a 3-minute video about trend identification, 3-minute video about whatever entries, 3-minute video about exits, you know, stuff like that. So you don't have to like watch a 13-minute video about everything, and get like that little nugget. I don't know. Any questions? I don't really know what else to yak about. I've just been yakking. I can talk about anything and everything for forever. Um, I can talk about what I like, what I don't like. Ignore the news. Please ignore the news. That shit's useless. That's one thing that bothers me, like about Facebook and just like crypto panics. Like, if you go to that website, it can be useful, but it can also be stupid. News is not designed for the trader. It's made for the whales and institutions. Like, people that are writing it either have no idea what they're talking about, or they're there to push a particular narrative, and the narrative is not designed for your benefit as a trader. I mean, it's the same thing like exchanges. Like, every exchange. Thank you, Daryl. Every exchange that exists can have trailing stop losses and trailing buy orders and stop limits and all this other shit. Like, they can put that on their exchange, but they don't, because that gives you more money, not them. Like, that benefits their whales that you can't execute, the orders properly. Like, Robinhood's the worst. Like, you can either choose to have a take profit order, like a limit sell, or you can choose to have a stop loss. Like, you can't have both at the same time. Like, that's ridiculous. So you have to make a decision to whether you want to make profit or take heat. And like, that's dumb. Like, there's nothing stopping them from having it on there, but they just don't, because that doesn't benefit them. Like, if you keep making money, they're making money, but like, the people who are giving them the liquidity, like, they are losing money if you make money. So like, exchanges aren't designed to help you. That's why people have problems with exchanges, and exchanges go down and whatever. It's because like, they're not for you. They're for the liquidity providers. So third-party tools are always going to be the best for you to make more money. 3 commas, Bitsgap, trailing stops. I don't remember. That's not the name of the website. I can't remember, but trailing.com. I don't remember what it is. But like, third-party tools that you have to pay for will always get you better profits than just using the exchange. And then the benefit of using them, especially 3 commas. 3 commas has a partnership with Binance. So if you make like an account on Binance with VPN and then use 3 commas, like, you don't have to log in to Binance on your computer anymore. So it doesn't matter that you forgot your VPN one day or something like that, because it's connecting through like a third-party server that's somewhere where it's not restricted. So that's also helpful in case you don't always remember your VPN. Yeah, I don't know. Oh, another thing about news. Alan's been really, really good about posting all the divergence targets and stuff like that. If you don't know what that is, divergence is when you have an opposite reaction in price from a price action oscillator. Well, it could be any oscillator, but like, for the example, we'll say momentum. Like, if momentum is going up but price is going down, like, that's a divergence. And that typically, when you're using it against price action oscillators, a divergence, like, momentum essentially tells you what the average. Let me see if I can put this in a different way. Okay, we'll go for overbought and oversold. That's a concept that just about everyone understands. If something is overbought, then that means it exists in a, like, the average price exists over what it exists over what the average price is. So like when things are entering overbought territory, then you're expecting price to crash. Or if they're in oversold territory, then you're expecting price to rally because like it's existing in this position way above or below the average price. So divergence will show like when you're using price action oscillators to define or to identify divergence, you're showing when price has exceeded, over 2 times or whatever, like the average price is, and like price likes to revert to the average like that throughout history of looking at, momentum and RSI and CCI and DPO and all these other indicators. Like price likes to be at the average. Like that's just no one wants to buy expensive shit all the time. Like they always want to, get a good price on it. So eventually, if price is too at an extreme for too long, it's going to crash back to the average. And divergence is really good. Like the way I have shown Alan and Josh and posted about, like that methodology of determining divergence is like really good statistically for like finding where the average price is. So if you can watch the videos about divergence, you should do that because they're also really good, and it's something to add to your. I don't remember where I was even going with that. Damn it! This is the problem with like not having having a script. I have no idea what I'm talking about. I'm just rambling. I don't know why I started talking about divergence. Does anybody remember? What did I say before divergence? I'm sorry. I'm horrible at this. I need more like interaction because I can't. I'm so bad. Like I'm not used to. I've never done this before, so I don't really know what I'm doing. I'm just like talking about shit.
Well, I think it's informative to me. I actually am enjoying your rambling. I think you need another drink, is what it is.
Yeah, this one's almost done, but I don't have any more vodka. I finished our Costco bottle of vodka this afternoon. So, well, I mean, I didn't. This is only one drink. Like I haven't had multiple drinks. This is just the only one. But there was just like the dregs of the bottle left, and I was like, well, I guess I got to finish this so we can get more. Yeah, no. I don't know. There's just like so much stuff that bothers me that I see in the chat group and in Facebook and stuff. And it's like I comment whenever it like gets to a point where it's like, okay, this is ridiculous and I need to say something. Like I really want more access to their historical data in Altcoin Alert. Like sentiment is a really, really good indicator, but it is typically what is it? Like counter trend indicator. Like Doge would be like a fantastic example of that. Like going into, the SNL thing, like Doge sentiment was like insanely high. People were probably the most bullish about Doge hitting $1 than they ever have been ever in the history of Doge. And what happens? Like it crashes to shit. So like sentiment is like typically when people are the most bullish is when things go back the other way. There's a in stocks there are a couple different like tools that do calculate that, and it's usually involved like a bunch like major hedge funds and institutional traders usually have to report where their positions are, like if they're long or short, and also that includes like Robinhood and Webull and TradeStation and other like really big brokerages. Like they have to report where the majority of positions by retail traders are either long and short, and that's like having access to like that doesn't exist in crypto. What they're doing right now sort of does, and then you can kind of compare that to like Bitcoin futures, like on the traditional markets. But like typically institutional traders will be on the opposite side of retail traders at extremes. Like when when retail is at its most bullish is usually when institutions are starting to turn bearish, and like they'll just put all their money into dumping the market. Like when I think in the news that this was posted in the news right before SNL started, like some institutional trader, like some high level money manager posted he was short on Dogecoin. Like that's a really big sign where you have retail being the most bullish and then some big level player comes out short. That means that other big level players are probably short, which means they're going to put all their money into dumping the market. And that's like exactly what happened. So it's interesting. Like I really wish I had more historical data and like got to talk to the people who developed Altcoin Alert, because I don't know how it's making it. Not that I need to know how it's making its calculations, but like that would be nice, because then I could probably use it better. Because typically sentiment is an inverse relationship to price. So it's like I don't know what their algorithm, like how it's getting to like price expected price going up in 24 to 48 hours. Like, well, like how are you getting that? Like just because people like, and that was another thing that like bothers me. It's like, well, just because people are talking about something doesn't mean it's going to do anything. And it like and then like on top of that, like if I had historical data, I could like actually run my own tests and stuff instead of like doing what people are doing on Facebook where they're like buying, buying all the bullish indicator, like all the, bullish AA scores, and then seeing where they go in 24 hours and selling them. Like, well, that's fine, but like that's also like a really crude measurement. Like quant traders, which this was all designed by, a quant trader. Like all they do is like look at numbers. Like they just analyze numbers and like they apply those numbers to like everything, and as long as everything over aggregate is positive, then that's a system that you can trade. Well, like people can't do that. Like I can't trade every single AA score that comes up. Like it's impossible. I just don't have that kind of money, and that's typically how like they'll create their systems, where they'll just like over the entire market, like it probably has like really good results, but like we can't trade the entire market. So like it may not be as good as like stats will show just because we can't replicate what it's doing across the market. So like I have a hard time like not necessarily trusting AA, but like I have a hard time like understanding how I can use it best, just because like I don't know how it's really making its calculations, and I don't know that it's being used or not used against the entire market, like if that makes sense.
I'm pretty new to this, and I'm trying to learn the charting, but I think the problem with the AA altcoin alert is that people grab onto it and they think it's going to be a quick way to make a few bucks, and at the right times it is maybe.
Yeah.
But I've get on YouTube, I watch videos when I have time. I read about the coins or the currencies and find out what their applications are, how much money's been stuck into it.
Mm-hmm.
That's what's helped me kind of direct, because I don't know how to read the charts that well.
Yeah.
So that's how I've directed my money, and I've went longer term versus short term. But I would rather do more short term.
Yeah.
And know that I have the opportunity to make some quick money.
Yeah. Like if you're looking more short term, then you don't necessarily need to be too concerned with like the fundamental stuff. Like you can just be purely like I trade purely technically. Like I don't know the shit about half the coins, probably 3/4. Well, screw it. I don't know anything about 90% of the coins that are out there that I'm trading, but like the only thing, like you can probably stick to like the top 20, top 50 and make plenty of money, because like they're in that range. There are coins that are, that have a high market cap, and there are coins that have like a small market cap. No, you're probably not going to get some, runner of like 3,000%, but like again, like that's not like that shouldn't be your focus. Your focus shouldn't, like, if you're trading, your focus shouldn't be trying to catch that one big one every time, because you're not going to do that. And if you're looking to try and do that, then you're going to end up with like more either losses or your capital just sitting somewhere waiting, because like you can't, like, there's not really good indicators for that. Like, well, I say indicators, there's not really good indication of when that's going to happen. Like I can look at my, like, after something has like made some crazy explosive move that was like, 1 cent or something like that, and then made an explosive move to like 40 cents or 50 cents. Like I can look at my chart and there's nothing. Like there's no way to know. Like it's just, it's being in the right place at the right time or having inside information. Like there's just, it's so hard to capture that stuff. Even when I look at like volume inflows on like the 1 minute time frame, along with other like momentum based things, like it's just impossible. So like if you can focus on getting the principles and methodology down and just applying it over and over and over and over to like the top 50, then you'll be completely fine and you'll make tons and tons of money. Like there's no end to the amount of money that you can make just on normal trades and not trying to like find that one big explosive one. And like even saying like just trying to eke out 1% is like, you can easily get well over that with like the stuff that I like talked about today. It's just like finding the right time to make the trade. Yeah, it's, they're like, I don't know. It's really tough. Like I'll use AA sometimes as like a confirmation, or if I'm like if I'm completely out of like ideas, or if I just have nothing that I'm like, if all my positions are just kind of waiting for an entry, I can go to AA and I'll look at like the trading activity, or shit, I don't remember. I don't even have the site. I like never go to it. Why isn't my keyboard? It's not connected. Oh my lord, why am I so bad at this? I got like a new mechanical keyboard and I can't type for shit. It's like really sensitive. Yeah, so you can sort by like social activity. Like if I have nothing, like no idea of what to trade, like I can sort by trading activity, which is like usually volume or something like that, or social activity. And then I'll go and look at that chart and see if there's some sort of interesting setup there. Like if it's ready, if it's near a swing setup or something like that, then I'll sort them that way and look. Then also I did some testing, looking and comparing short-term and long-term sentiment. Short-term sentiment is so like their analysis of sentiment, like looking at Twitter data, whether people are bullish and how bullish they are on it. Short-term sentiment is this hour compared to the last rolling 24 hours. Yeah. So it's this hour compared against the last 24 hours, like each hour individually. So it's like this hour compared to like the last hour and the hour before that and the hour before that and the hour before that for 24 hours, like in like 24-hour look back. And it ranks, where this hour stands compared to each of those last 24 hours. So that's what the short-term sentiment is. And then I'll do that, a comparison of short-term sentiment and long-term sentiment. And I'm using this in a way, like I was talking about earlier, as like counter trend indicators, where if the long-term sentiment, which is, it's this day compared to the last 20 days, the same way like the hourly one. So like today compared against yesterday and the day before and the day before and the day before and the day before, and it ranks all those days. So if we have like I'll use this relationship as sort of a crude divergence indicator, where if long-term sentiment is like bearish, but short-term sentiment is bullish, then like long-term sentiment is like the general market. Like everyone is like super duper bearish about some coin. But in the short term, people are starting to turn very, very bullish. So that could be like an indication of like the beginnings of a rally. So I'll like, I'll look at the very bearish, coins and see which ones have a higher short-term sentiment. Then I'll go and look at the charts and see if there's a divergence setup or a breakout setup coming soon that I can like play the retest of. Like that's something like I'll use this as either inspiration for a trade or I'll use it as verification of a trade. Like, well, I don't use it as a verification of a trade because I don't care about sentiment. But like on paper, theoretically, like I can go back here and it's like if all the things on my technical chart line up, then I can come and look here and see if like the fundamental or sentimental side also lines up with that. And if they all line up, then cool, I can make my trade and think that, it'll work out more often than not. But, I don't know. I would never just trade altcoin alert and in isolation. And I also have never traded one sig dev. It just doesn't align with my risk tolerances. So yeah, I don't know. Anything else? What else we got? We're here at like almost an hour and a half, which is like, I don't care. I mean, I'm not really doing anything, so I don't mind chatting more. But if anyone has anything specific, I can address that.
I'm sure I'm gonna have some more questions for it another time. I just don't know what to ask you right now.
I know. Well, like, so all right. So here's.
Well, I'm happy. I'm not the only one that just uses the altcoin alert as like inspiration or like just a secondary thing because, people complain about it all the time. Well, man, for real, like it is what it is, and it does give you an hour. Like it's reasonably accurate sometimes. Problem is that they'll show up for a little bit and like, oh, it's gone now.
Yeah.
It changes every minute. So what the hell? You can't rely on anything other than just the way you've simplified. At least the candle formations and theory behind stuff. And for me, it's like the things I technically already know, but I just have a hard time getting myself in the groove, in the habit of actually doing. So it's like with anything else, just reps.
Yeah, like honestly, when I first so I've been trading for over 7 years, and I haven't gotten into crypto until the last it's a little over a year now. Honestly, I spend a majority of my analysis and time on Bitcoin. That's where I will look at Bitcoin every day on like the daily chart, the weekly chart. Well, not the weekly chart every day. That's stupid. But like I'll look at the daily chart. I'll look at the 8-hour chart. I'll look at the 4-hour chart. I'll look at the 1-hour chart. Sometimes I'll look at the 15-minute chart if shit's going sideways or if it's on like not sideways. If like shit's going down or it's on a crazy rally, I'll look at the 15-minute chart. But like I'll spend a majority of my time looking at Bitcoin. Bitcoin is even if you're not trading Bitcoin, even if you're just holding Bitcoin, being able to understand its price action will make you so much better on every other crypto asset, because like Bitcoin is the market. Like Bitcoin dominance is below 50% right now, but that's just stupid. Like Bitcoin controls everything. Everything is relative to Bitcoin. And understanding how it moves and how it acts will make you a better trader. Like that's where I spend when I first started getting into crypto, that's all I looked at. I didn't trade anything else. Didn't trade anything else until like 4 months ago, yeah, like you need like understanding, get your reps on just looking at Bitcoin. And then when you like you don't have to trade it, just like practice, like draw, like so when I was first starting, well, not when I was first starting, full disclosure, I've blown up like 4 accounts. Like it's in my history, like shit, it happens. Like everybody, if you don't blow out one, it's like motorcycles. Like I have a lot of motorcycles. There are 2 types of riders: those who crashed and those who will. Like it's the same thing in crypto if you start trading derivatives. Like if you're in futures, or well, Bitcoin does have options, but you should stay away from that shit. If you're trading on leverage, you're probably gonna blow out an account. If you don't, damn, you're lucky. Like you need to understand Bitcoin. Like my daily process when I first started was looking at the daily chart, doing my support and resistance, looking at the 8-hour chart, doing my support and resistance, looking at the 4-hour chart, doing support and resistance. And like, I wouldn't even trade it. Like I was holding at the time. I would just buy Bitcoin. I'd dollar cost average in, and I would just buy Bitcoin, whenever it hit one of those lower, like the higher level supports. If it was the 8-hour support, I'd buy there. If it fell down to the daily support, I'd buy there. And like, that was it. And I'm just testing and watching how it moved along, the supports and resistances. And like if you can understand that, then you can really understand everything else. And when you start trading other assets, like do your setup and analysis and then look at Bitcoin, and like if Bitcoin's fine, then like everything else in your trade is probably good. If like that's part of, like I also have a video about sector analysis. Like that's not like super comparable from the traditional market, but it also does kind of work here. Like if like exchange tokens, like your KuCoin shares, your BNB, your FTT, and Huobi token, HT, like if those are all performing well and Bitcoin is performing well, but they're doing better than Bitcoin, then like those are the thing. Like you want to compare everything against Bitcoin. Like if they're doing better than Bitcoin, then like why would you be trading Bitcoin? Trade these other things that are doing better than Bitcoin. And like when Bitcoin starts to fail, these are going to fail, but not as much. And when Bitcoin bounces back, these are going to bounce back higher because they're naturally performing better than Bitcoin. Like you really need to understand Bitcoin, because Bitcoin will determine the whole rest of the market. And then once you get like further into alts, then maybe you can look at like comparisons against Ethereum. But like honestly, just focus on understanding Bitcoin and then trade everything else. But like always refer back to Bitcoin. It's the way to keep you in the game like as long as possible. I really love sector analysis. Like that's been like super awesome, but it becomes more like time consuming when you're making trades and stuff. It also works better in the traditional markets than it does in crypto, but whatever. Yeah, no, understand Bitcoin, practice there. Well, not like you don't have to trade Bitcoin, but like paper trade or like draw fake trades or think about fake trades on Bitcoin. Because the more intimate you become with Bitcoin, the better you'll be like in the rest of the market. Like you'll be able to see where you can eke out, a couple extra percentage points, or like stay out of like a really good setup that and like afterwards ends up failing, just because Bitcoin was like looking a little bit different than what your setup was. I don't know. I have like so many things that I want to do here for stuff, but like there's only so much time in the day, and also like I'm working for free.
We appreciate your time.
I was like
I
was talking to Pizza and Bryce like a while back about a potential like employment situation, but Bryce ended up like I don't know if he passed or just like it just wasn't like what he wanted to do. He's like, we need like Pizza told me, he's like, Pizza told me that Bryce said I need a rock star. I was like, really? Like I'm probably better than like every single trader that you've got here. I've got more market experience than like everyone. Like what like it what do you mean you need a rock star? Like, I've provided like tons and tons of value for like nothing. And if you don't see that, you're probably not looking. But whatever, it's cool. Anyways, my idea for hold on a second. My idea for this, like, I do some writing for a different trading group that does automated signals, and they're wanting to like expand out and do like more educational stuff. So I do like writing for them. But like my idea with this venture here in Altcoin Alert was to what I think I'm going to do is like have, excuse me, like different sessions throughout the week, like maybe 2 sessions a week, one in the morning, one in the afternoon, on like one weekday, and then on the weekend, one in the morning, one in the afternoon, like one being like on, let's say it's the weekday sessions, like the one in the morning will be advanced, or the one in the morning will be advanced, the one in the evening will be kind of basic, and then on the weekend the one in the morning will be basic, and then the one in the evening will be advanced, like, and just kind of swap back and forth. So like people on different time zones or area codes or different parts of the world can like attend, either a basic or an advanced. And then essentially I'll be creating like an entire separate like system outside of Altcoin Alert. Like I sort of started that with my website, but again, that's also still for like shits and giggles. I'll probably have like a Patreon or something like that, just something so I can like try and recoup some of my time costs, and then have like some sort of price tag associated with things. It won't be crazy because I don't give a shit, and I'm just doing this because I think it's valuable for people. Like I think that like one of the reasons I wanted to work with Bryce and Pete's was because I think they've done really, really well to create a group of like-minded individuals who are like, they're trying to build a like responsible platform. But the problem that they've like gotten into is like the nature of the economy and the nature of like economics. Like people are pushed further and further and further onto the risk curve, and like how many of the people in Crypt Nation are investors and how many are traders. And there are more people, I think, incentivized to short-term gains than long-term gains. And to be completely honest, like Bryce has got a short game problem. His long term is like amazing, and he knows everyone in this space, or not everyone, but he knows like so many people in this space, and he has access to tons of people who know things and are like, he knows how to identify like complete bullshit and real things. But like there are so many of his like short-term setups that he'll have that are good for long-term positions that are like horrible short-term trades. And like there are people that'll get into them in the short term or expecting short-term gains and like completely get their shirts handed to them. Where if he had like some sort of like short-term like check in the system, then he would probably get people either better entries for long-term or save the people who are actually short-term traders the heartache and the stop losses. So I like really, I want to try and create a space that is like bridging the gap between like the long-term traders and the long-term investors and the short-term traders. And one of the ways that like that I can do that is because number one, I'm a short-term trader, but secondarily, like I view every single thing as a trade. Like I have investments in quotation marks that are just trades and trade setups that I'm using the weekly time frame. Like, so if I make a swing entry on the weekly time frame, it's not hitting its profit target for like months, because that's just, it takes that long for the trade to play out. where like if I'm on the 5-minute time frame, I'll be in and out in like, 20, 30 minutes, so it's like everything can be and is a trade to me. So it's like I can be an investor and I can be a trader. It just, it's just kind of the time length or the time frame, that I'm looking at. But yeah, no, I think there's just a lot of people who need some short-term help, and also they don't really address that in the group. He like shows you how to set up your charts, and that's about it. And it's like, well, that's cool, but like, need a little bit more than how to set up a chart. And watching someone do TA is like fine, but like you're also not like you can't. Not everyone learns that way, and also like seeing what they're doing doesn't necessarily explain why they're doing it. And like talking to people about like he can't take the time to talk about why he's drawing support here, or why this is bullish, or why this pattern means this. And I think that's more helpful for teaching people how to fish than just giving them the fish, if that makes sense. I'm still rambling.
I think if you make your short-term game better, you can be better at your long game also. So
yeah,
that's why I'm interested more in short-term right now.
Yeah. Steve, thanks for coming by. I appreciate your words, and I'll record this and send it to everybody if you want it, if you want to listen to my rambling again. But yeah, no, in the short, like in the near future, I'll be doing this like on the regular. Yeah. Well, I hope to be, but we'll see how that works out. Like I don't know yet. Still figuring it out. But yeah, no, I think that there's a lot of short-term stuff that we can work on and get everybody better at. And the new chat or the new website that they're moving to from Facebook, I'm in there, and it will be a little bit better for like communication, like immediate communication. But yeah, just stay in the chat, stay in the Slack chat and talk there, because that's really the best way to communicate. If you have anything that you need, feel free to like message me or ask me anything. If I've got time, I'll get to it. Yeah, I don't know. I don't really know what else to say.
I think we all just really appreciate your time and passing along your knowledge. Thanks again.
Yeah. Once this, like, I'm gonna do the, like, I think for the next week or two, I'll still keep doing this either on Saturday or Sunday, and then one during the week. But once I kind of get into a rhythm of how I think this is gonna work, I'll probably do like $25 or $50 or something for it, just so I can try and get something myself out of it. I feel like that's not like too much to ask, I guess. But yeah, no, you guys, everybody's good. I don't care about anything really. And if you like, even if you like, anytime you have a question, like, you can send it to me and I can answer that or make like a quick video about it. I haven't done any videos in a while, and I should really get back to that, but I've had a bunch of stupid shit going on. Like I'm gonna have to move in like 4 months because we have like a really bad mold problem that our landlord is just not doing anything about. So it kind of sucks. But yeah, no, so I've been kind of occupied with that. And then my girlfriend's brother had he had hip surgery, he had a torn labrum. So we went down and helped him out around the house for a while. But, feel free to reach out. I'm happy to help. And I like being able to help other people be successful. Like it's pretty awesome. I mean, there's no reason we can't all be, so yeah, there are too many predatory things out there. And I think
exactly sharing love.
Yeah, exactly. Any other quick questions or anything like that? Otherwise, I guess we could probably end this. This is almost 2 hours.
All right.
I think at a later date, I might want to pick your brain about how to properly set up some really efficient bots on KuCoin or on, I guess I'll look into getting that 3 commas.
Yeah, yeah, sure. I did a write up in Facebook, like sort of generically, that I think got tagged to like one of their tutorials or something like that. But it's like just general stuff. Like you'll want to have like just a quick brief thing. You want to be looking at a coin that's like trending up. You want it to be volatile. Oh shit, what happened? Yeah, no, trending up. You want it to have a volatile price action, and you want your grids to be either above or directly below price, so you're not like taking too much heat. But yeah, that's pretty much all I got.
Yeah, right on.
Alrighty, you guys have a good night, and I will chat with you later. Okay.
Yep. Thanks. You too.